Hey there, it's the Market Sniper coming straight at you on gold and how you could have 10x'd the organic growth that gold has provided you just by tactful trading. Tactful trading, utilizing HVF method, being part of our community and seeing how we're calling and rolling with it. That doesn't mean we're getting it all right. We don't know what's coming next, but we just have a really powerful method. So let's just start right at the beginning. I've done a log scale chart that just takes the perversions of the huge moves out of the mix here. So what has happened? Well, we had a descending triangle structure. That's what's being illustrated here. So I'm going to draw for you a little bit. We had a descending triangle structure that was here. You can see that's what's being illustrated along there. It's actually a lot taller, but like I've said, I'm doing the log scale for it. This was a key level of significance. Yes, so we called it at the 1575. It's going to be an interesting level. It's going to be an interesting level. We draw a big fat blue line. We'll come to that again. Then we had the big sell-off and everyone wanted to be bulls all the way along here with gold. And we said, no, it's still a bear. We were investing and then trading it to the short side. That's right. We've told you this before, so I won't go on about it. Then we've got two little shoulders and we've got a bit of head structure. And then you've got a broadening kind of two bigger right shoulders. This was a big volatility iron out. Initially very strong sell-off after you came to that key neckline. The key neckline we called 1350, that number over there. So you have the 1575, which is that dark blue number which belongs over here. That's what's being illustrated to you and is shown to you there. And you have the 1350, which goes with that. Yeah, so don't be confused, they're a little bit offset. So what we ended up getting, so you've got this left shoulder, kind of non-standard head drifting down in a channel kind of like that, and then violently up. We like to see that swing in the momentum, so coming down and then strongly up, but it then did have a snapback reaction when it got to the 1350 level back down. Then we got to 2000 and this all, by the way, was 2016 lows. That was the Shanghai Accord. This dovetailed beautifully with fundamental events. People say, oh, but technical analysis, what about the fundamentals? You don't get it. The technicals are fundamentals in terms of the footprints in the sand. People with the fundamentals, acting on the fundamentals, are giving you the technicals. They are one and the same. It's the same coin. You're just looking at a different side. You can't push the one side without it pushing the other side. So anyway, this is also was a tightening and a volatility breakout that actually you could have got long here with us prior to the 1350 on a breakout of a falling wedge there, and that would have triggered you into the 1350, which was the confirmation of this inverted head and shoulders. It's a non-standard inverted head and shoulders in a kind of way, but certainly identifiable and a long time in the making. You've got to respect that the first time you touched that level at 1350 was on the way down way back in 2013. Let me just get that alert out. It's a real pain in the ass because I've got to escape, end, and then go away. Yeah, alerts are awesome, but they come at the worst time. Anyway, so that was the beginning of 13, and you're breaking out in 19, guys. That is 6 years. And by the way, for me, the bear started when the descending triangle broke over there, so even higher up. But anyway, that's the relationship with the 1350. 1350 was a confirmation of the going long there. Right, let's get out of this draw mode and take you into a tighter time period. Most of this you already know. Just needed to set the scene a little bit for you first. So let's drop down, let's drop down, let's drop down. We go into the daily. We go into the daily so that we can see a bit more detail into what's gone on recently. I'm going to bring you right up into the here and now, including the interest rate drops and how you could have maximized this and how the HVF method is such a powerful method for you. So we've been squeezing up, as you can see. There's that big blue line. That's the 1575. That's the legacy floor of that descending triangle. There was your confirmatory event. This was your falling wedge break over here. We'll get back into draw mode in a bit and I'll highlight them, but let's keep dropping down. Let's keep dropping down and we'll show you what happened. So we had this irregular upside HVF draw, and I'm showing you, I'm letting you even see a little bit of what we were trading and how we saw it. That was a triggering event right there. Where's it sitting on? This entire structure, guys, this entire structure is a wind up to keep above the 1575 key level of significance from the past. One of your big chapters that you will learn is key levels of significance on our program. And we're showing you, I'm giving you an example why you need to learn that and why it's so significant. Because it is real history. This was the key levels of significance. Attempts to get above, not holding, but getting an iron out of the volatility. See all these interactions with this key level. Where did your RH3, our third high, which we're looking for the break level, occur? You bet you, just a toe over the 1575, the wind up. Where did it go? Absolutely low volatility and feign and break before moving, just above. You could have had your stop there, and in fact, you could have enriched that. You'll learn how even further, and then you get your move. First interim made and pullback. Second interim made, boom, you make the HVF target and this huge target. What is that target? Two confluencing targets. That was a signal. You're going to get a little bit of overperformance. It never gets you out at the extreme top. You should never try to get out at the extreme top. It's dangerous. There might not be sufficient volume. You may not get the liquidity out of your broker. You should have closed leveraged longs, and you even could have reduced investment for a bit because there's an opportunity going to come for you to buy lower down. That's what a target means. It means this is a good local high. Something bearish is going to occur for a short period, maybe a medium term period, who knows. So that's what the deal was. You should have closed 1642, 1652. You get the blow off moment. Whenever you get the blow off in the extremity of the upside move, something else is coming. Something else is coming. So we're going to drop a time frame and we're going to take you into that. So a confluence of targets could have got you out there. By the way, while we're still on this time frame, look at the increasing of volume. What does it do after pullback and then a rising wedge here? This was a rising wedge. I'll drop the time frame and show you that in more detail in a second. Absolute smackdown. So this is the panic of the coronavirus and everything, fear and loathing. Gold sells off. Down she comes. You could have put the buy order to re-get in at your funnel, green level, right the way through, stood on your original HVF stop. You would have sat there. It would have been a real cliffhanger. You could have bought the value. Boom, before you know it, you're back up at your target for a second time. You could have effectively traded, not claiming I did that, I hadn't. I've been a bit sick and up and down, but you could have got in a second time and rode back up to target in even quicker time. By the way, what happened in that journey? Let's have a look. Let's take it down into the lower time frame. Let me tell you guys, if you're sitting there with moving averages and RSIs, you are flying blind. You are looking at some mathematically manipulated lagging data that is absolutely useless in comparison to what we're doing here. We don't fill our chart with crap and take ourselves away. The price patterns and the price data is what it is the game. If you just want some smooth version, single line, trying to break it all down for you that is lagging, let me tell you, you don't want to trade. This is the game. This is the hardcore part, price behavior analysis with key levels of significance, with patterns and targets. If you aren't prepared to draw them and get into the nitty and gritty, you aren't going to get the insights of what the market wants to give you. And you're wasting your time. Get into the price behavior or go. That's the game. There isn't a soft version where you get insights. You've got to get stuck into it. Okay, let's drop the time frame. I've got to get out of this quickly so we can clear. And let's see if we can go into the 1 hourly and drop down by 4 again and show you a little more. Okay, time to take off those jaws as well. I'll just expand that. Clear the face. Off he does. Screen clears and you're now back in business. Okay, so the blow off comes in. You get a broadening down leg, you get a rising wedge over here. Note the grind line. You'll learn about grind line theory as well, but that's an angle grind. You've got a bit of an ascending wedge. Actually, now this is a critical point. I posted incorrectly. So guys always talking about, I got this right, got that right, and we do plenty of that too, but I posted incorrectly. So complete confession. I said, hang on, this is looking really interesting. So with gold bull, is this a rounded bottom? Did we get a bit of a inverted head and shoulders, and are we ready to go back up again? And the answer was absolutely no. I was allowed myself to make an assessment, and it was entirely wrong. But I was early. I was too early. We needed a bigger sell-off, and we can't predict the extremity of how the market was going to react. So what was I looking at? Let's just show you where we were wrong. And how we profited despite being wrong. And this is the benefit of being properly awake to the markets and being quick to flip. I was absolutely wrong with my initial assessment. I posted this segment of the chart. Let's get the drawing tool back up. And we're going in red, and we're calling this. I posted this, and I said, are we getting a bit of a round? I had two-minded jaws. I said, are we getting that little bit of a neckline across our targets? These key levels just keep coming back at you. This is your inverted head and shoulder target line, and that's your HVF target line, the two confluences. This was your final blow-off moment with a little follow-through there and a tiny little continuation pattern. That was it. That's how much you got extra over your two targets that were absolutely confluencing together. So what did I say? Okay, are we already early getting along? And we had a double U head, and then we're getting these little right shoulders. So I said, okay, I'm ready to get long here. I'm ready to get long here for us to reassert gun. Have we done with our sell-off? Post the targets, but these were big targets. I was too aggressive. We needed a deeper dip, and I started to get long here. And then it was pumping up, but then it couldn't get away. It kept coming back and forming these shooting stars. And I was going, no, actually, I don't like this. There's something not right. This was a key level of battle. How did I know it? Because it was our inverted head and shoulder super macro chart coming from 6.5, 7 years of creation. Tell me that's not going to be a significant key level. And we struggled to get up. I ate a small amount of red. I reversed and went short. On gold over here after calling and posting on Twitter. I think this could be a resumption to the upside. Sorry, I didn't have time to go to Twitter and tell everybody, hey, I'm wrong on this one. We got into the community, guys, I don't like it. It's going bad. Close. And then after thought, bang it. If it's not going up, this thing is actually going to be going down. The volatility is going to expand after this period. So we've made a huge target. So we got short here. It was a very beneficial trade, as you can see. So that was for a short while. I in no way took it all the way down there. I've had good size on it. I made back the small amount of red I'd eaten and a huge amount more on the downside. And then I was out. I didn't want to stay short long gold. I'm not here in the game to be short gold in this low period. We've got a macro upside HVF on gold against the euro, on gold against every major currency that we are trading against except the dollar. And I was like, no ways. So guess what it does? It then has a further bin. I'm quite happy not to have all of that. It gets to our buy zone here, bounces up, inverted head and shoulder there on a smaller time frame. So you can see the left shoulder, you can see the head, you can see the right. You can drop a lower time yourself to see it. Goes into a push-up, makes that target, comes back down, sets up continuation, boom. Up she goes on the US announcement of rate cuts. Guess what? Infinity printing, up you go back here. Boom. Where do you stop? Who'd have thought it? These two levels, these two confluence levels giving you a stopping point. And we are squeezing with a grind line. We thought of going long here, and then I thought we had a play with it. It wasn't going the way it wants. It's a small amount of red there, just like we did there. But the winners have been huge, and the method has been guiding us. So this is sitting and waiting for something to happen. This brings us up to the here and now on precious metals. Gold is the god market of the precious metals, guys. You've got to understand this. So what is this? Now, I'd love to say to you continuation to the upside and just a run. You can see I've done a little amplitude draw there. However, I suspect possibly not. So I'm going to tell you what I think might happen. There's something going down. We know that the US, so you've got to tie in with a fundamental narrative. The US cut rates by 2 basis points in an emergency meeting. But don't worry, there's nothing to fear. We just meeting in 2 weeks, but we got to panic do that now. Anyway, don't let me get into reset sniper. So Canada did this some cuts, I believe, last night. I haven't even checked how much. It's a bit less of a significant nation. I'll need to just check whether it was the 50 basis points or 25 that they did. But we know we've got the ECB, that's Europe, BOJ, that's Japan, out there, and a few other big central banks that might do some action. So is gold sitting here with a probability of further rate cuts that could push it? If further rate cuts it could push it. Or maybe it's pricing in. You see what these guys did? Instead of doing global synchronized and releasing everybody cutting simultaneously, then they've shot all the ammo. They go with the US to give it the big pump. And then they wait and see the market reaction, and they see how it's all playing out. If they think, no, we're not getting quite what we need, they drop the ECB and the BOJ in there, but they stage them to give energy boosters. They don't give the entire shot all in one go. And obviously, if all these major central banks start proliferating, you'll get a move up. What might happen is we're sitting waiting, and I think I have a slight bias to this one. It doesn't come, and we get a little bit of a bleed out, slowly waiting for this news to come, and we bleed a bit out. So maybe we've priced a little bit of the other central banks in as a reaction, and this eases out. This is not a comfortable looking upside continuation pattern. It's getting a bit grindy. I'd love to tell you it's going up there to there, and it still might do it, but actually I suspect the other. This is a no trade for me. This doesn't have high enough probability on it, but I would most like for our overall structure in the precious metals market to see this be trading a little bit off and coming down. Why? Because we already have a new high one up top here, where we ran as high as just under the 1690 on gold, and we've capitulated to our funnel, which is down by the 1561. So I think we traded around 1562. So you've got 1562 to 1690. It would suit me just fine if this was our primary impulse, and then we get a secondary one with a little bit of easing. This would be our second. What will we then later get? Look at this scribbly mess. Wow. It's so much better with my Epic pen on my Surface. But anyway, let's clear that out because it is messy as all hell. So what do we do? Let's go to the 2 hourly, and I'll give you a scenario cast of what I would most like to see, and I think has a reasonable chance of possibly happening. You can see there's a weightement of news, but I actually think it's going to be initially disappointed first, and as a result we may in fact get a nice big juicy wind up in precious metals. Don't forget these key levels. Wow, these key levels. There you got your 1575. That's your base of your descending triangle, which was the final giveaway that we were in a real bear market. We're now above. Guess what? It also served as support. The funnel also formed exactly on the 1575. Our structure, as we were telling you, everything is confirmatory. Key levels of significance. No one understands why we do this, and why you'll do a major chapter on learning this if you come on board. Details below. And the confluence of the targets. Man, check how it tapped out here and got stuck there. And where did this get tapped out? Over here. Best thing that happens for us is we get a draw back. So let's change color. Let's go for purple. Yeah, purple. Get something along the lines like this. It might settle in and around. Now don't forget, that would have given you funneling over there. You'll learn maybe a RL2 where this was your low one. You will get a secondary low down here over there above. So this supported right to a funnel within a couple of dollars of the stop. Can you believe that? You'll say, oh, coincidence. I'm so done with spotting these coincidences. They happen all the time, my friend. And that's the power of key levels of significance and HVF method. H1 over here, RL1. If we can get this will be my party dream. In other words, back up here, and from the point this rolls over, you'll probably get a small little fractal that will be slightly inverted. It might throw another funnel down here. We get an RH3 over there, a third high over there, and then we get continuation and drifting and kind of real quiet, and then it all kicks off again. And what do you have? Straight lines we need. Let's see, we'll use the arrows instead, change them to green. You will have something equivalent to this. Go away, you horrible thing. There she goes, there she goes. And that would be what we'll be looking for. And you'll get a nice juicy amplitude all the way from the 1690 down to here to post it up. That is the trade that we would most like to see. And I think any delays in the ECB, so they're playing it by ear here. You'll be able to get long on the gold versus the euro again, one of the sickest currencies of the big majors. They're all sick in different ways. You'll be able to get long gold against the euro again. It's made unbelievable progress, guys. Unbelievable progress. What you could, in fact, let me just clean that screen up. I'm going to take you out to the euro USD, and you can see how that chart has looked. Euro USD, XAU, EUR, not Euro USD, sorry, gold versus the euro. And by the way, on the Euro USD, a little bit of a head and shoulder structure. So maybe at some point people are thinking that the euro may indeed do some rate cuts, but it might not come when you most expect it. So let's just have a look at that bigger time frame. Weekly, is it monthly? Whoop, let's get this chart on the road. Let's hide some of the jaws there. You can get some sense. So that is a shooting star at our interim level. Yes, you've got your structure here that is again drawn, and we've given you targets on previous YouTubes for that. Go grab them there. We've given you the targets for where the euro is due to go. So you can break into this trade. You should have been long down here, guys. You should have been long down here at this level here. That's where you should have been long on the takeout, that breakout bar, and you should have a stop over here. Let me show you. That's where you should be. But you missed that trade because you're not in the community. You think investing to learn is a backward step. It's reduced your trading account, and then you'll go and make some more losing trades, which you wouldn't have made if you'd learned and you're in a community of like-minded people doing sensible things, doing high reward, low risk breakout trades on key trending markets. My goodness, what are you missing? So that interim was made. So we were expecting a pullback. We were expecting, in fact, progress had been epic. You've had progress coming from here all the way up to that point, virtually one of the steepest lines you can have. Hey, they don't want to allow these things to be too disorderly. Where does it rest? It rests at an interim level. So now you've got to try get in. You've got a shooting star here. It could still come off again. You aren't necessarily done with this progress decay. That was quite a resistance event. But you could break into this trade. You could break into this trade on the structure that I've just described if it dissipates. So let's have a little look at this one, a little bit lower time frame, and see what we can see for you. And you will find it equally fascinating. Whoop, still in draw mode. I got to get used to this new thing. So here you can see a similar type price structure, and I'm not happy to call this upside continuation. My suspicion is there's actually a decent chance that this wants to come down. Again, you can see we've postulated, and I don't expect that to be the priority one. I actually think we first bleed out a little bit here. By the way, look at that inverted. That is what I traded on when we realized that it wasn't going up. It was actually, remember the smile that I showed you where I said we made that mistake on Euro USD? My apologies, I keep saying Euro USD. XAU, gold USD. On gold USD, where I said we were inaccurate. This was the trade. This was what was forming on the euro version of gold. The euro version of gold set up an inverted HVF structure for me, and I was watching it and I was saying, hang on. And this is the value of 360-degree analysis, guys, that you don't get because you're sitting watching indicators and moving averages and saying it's long on the 18-week moving average, but it's still short on the 52-week moving average, and I'm waiting for that line to cross that line. Oh God, I feel so sorry for so many traders brought up on so much of this old crappy dogma. It's like a religion, RSI and moving averages. It's absolutely like a religion, brought up on the tooth fairy and Santa Claus, and everyone has to do it. I can't get over it. It's so many people losing so much money. Anyway, so you have an inverted HVF right here, and this was the point. This was the point, and we were doing spinning tops on the gold. Remember where I showed you we were wrong on gold? I said it was a nice round at bottom, and it kind of could have had an inverted head and shoulders, and then it was starting to have a battle, and then it failed. That was this point right here against the euro. And I said, hang on a minute, because I'm doing 360-degree analysis, and I'm looking at gold across other currencies as well, and I'm seeing a weakness on an inverted HVF and spinning tops and expecting a break. I said it's going to fail on the dollar as well. It can't start spilling against the euro and be bullish against the dollar unless the euro dollar suddenly explodes more unbelievably to the upside. It can't sit in between the two. It's an anti-fiat. It's either stronger than both or weaker than both. And what did we come to the conclusion? We quickly flipped and we took the short trade. And I actually took it only to target. I didn't get the overperformance. You could have stayed in the overperformance all the way through down to here. That's it. You'll learn about overperformance and how we draw these in time. You come up here. By the way, you're sitting there on YouTube. Oh, amazing. I'm getting so much free stuff. I'm never going to pay. I'm going to learn and do it all for myself. You're going to lose money if you don't understand the principles, if you can't draw it. You think you watch one YouTube and you think you're going to learn. Find a way to learn. We have self-study at low cost. You can do it all for yourself. The best way is to do it right. So we traded it. So we traded gold short, but we chose the euro as the fiat. And you would never normally choose the euro because the euro sucks. But guess what happened on the euro USD? And this is why I kept mentioning the euro USD. During that period, the euro USD, which has been in, let's have it for you. And this again, 360-degree analysis on currencies. This is a chart porn. It's beautiful. And it's been getting a benefit against the dollar for a while. It's got this channel that it's been trading in. And the euro USD was down here at the base. So during that period, the euro USD was actually going up. It was in one of those rare periods where the euro was in an up move. I've boxed out two other places where that happened, none of which with the same momentum as this most recent one. By the way, if you follow my Twitter and all of that, you would have seen the rising wedge short call over there when the dollar was super strong and the euro was losing. That took it down to the bottom of the range. And then, of course, this started pumping before the 50 basis points cuts. It tells me they insiders and they cheats. The euro was absolutely running up because the dollar was going to be the first to cut and made the base points. And it was already up, well up here by the time that happened. So going short gold against the euro was a better trade than going short gold against the dollar because the euro was climbing strongly against the dollar. And then the dollar came out with a base price announcement. See, charting gets you in the right best trade. Charting gets you into the right trade, even counterintuitively, going long the euro against gold for a short period of time, not using the dollar. You wouldn't have guessed it, but the chart gets you there. If you know how to do 360-degree analysis, you understand the principles of trading, and you're not sitting there wondering why you can't get ahead in this game because you're not moving forward. You don't know which parameters. You don't actually know what to do. I spent 15 years not exactly knowing what to do, having to piece it all together, and most people don't get there. And then putting it in a method and making it entertaining and learning worthy to bring new concepts that aren't even being taught technically anywhere else in the world in terms of HVF method, that are better than the garbage you're being fed by the traditional marketeers in this game, which make me sick, like all these indicators and moving averages. Anyway, enough of that rant. Top out over here, you're at the top end of the range. You've returned, moved to this grind line. That was the rising wedge that we called short, that we tweeted the chart out for you. If you're following the Twitter at the Market Sniper, you would have seen now the rebound, the dollar rate cut. Now it's a question of will the euro follow? Guess what? I think the euro now in a short time frame, head and shoulders. For those of you who care, you can go and look and say it's probably looking a tad toppy. There you go. There you go. Who would have thought it? Piecing together all the pieces. It's so much easier when you have a proper method and a community around you watching your back and looking at everything, because it's difficult to remember absolutely everything about all to do, especially when you're not trained in an area. So you can watch YouTubes. It's time to learn. It's time to kick up. It's time to be on the right side of the market. So who knows? This may well reverse. A little bit of a flat shoulder. I prefer to see a bit more violence. I think the reason this is low volatility as a shoulder is because there is tentative waiting for an announcement. In other words, no one wants to make any big moves right now. They're waiting for someone to say, we're going to cut 2. XYZ, ECB, Bank of Japan, etc., etc. But at some point, I expect this will roll over to the downside. So you do not want to be long euro now. Not that many of you were thinking of that, but I would expect to see it give ground to the dollar-ish at some point. But it may drag it out. The structure may break out, or it may trigger. There's your neckline, by the way. 1.11, key level of significance, round number. Who'd have thought it? More coincidences, no doubt. Okay, guys, you're getting the message. 1.10, you can see all these key levels are in here. This is what you've got to do if you want to master trading, Forex, and gold, and this is the nature of the game. Anyway, long YouTube. I hope you've enjoyed it. That is gold. I didn't even touch on silver. You saw the magic of what it can do for you if you are analyzing in the correct way. And here we are. I think a little bit of a shooting star. I'm going to just get a nice clear read. I think a little bit of an easing first. It's too volatile. We need to iron this out. A little bit of an easing. It all needs to get a little bit calmy. Big whiplashes up and down. People are getting giddy here. So if I were gun held to my head, a little bit of an easing. All right, that's it from me. I'm Francis Hunt, the Market Sniper, the Crypto Sniper. Grab the free mini series below. Share and like if you value anything that you've learned here. And also tweet it out, retweet. We like that. Thank you. Post comments. We're interested in your views. We want to hear from you. Grab SCM. Been trading 100:1 leverage. It has been awesome on there. The links are below. You can also buy gold through bullion. If you support me, I appreciate it. If you choose not to, I don't care. Take what you want. I'm grateful for you here. And thank you very much. Bye for now.